Hello students, how are you? If you trade every day and still aren't making a profit, it might be because you're missing out on this powerful trading candlestick engulfing class. I'm going to show you just one engulfing pattern that I trade every day. There's no confusion, no indicators, just good results as we cover everything in backtesting. So first in this class, we'll discuss the engulfing pattern. Then we'll discuss entry and how to refine liquidity. The purpose of explaining the engulfing pattern in every class is to help you practice so that it becomes second nature to your mind and eyes. When you look at the chart, your eyes should easily scan it. First, I'm telling you again, there is a bullish candle here. If you see, sorry, it's a bearish candle. Look at the bearish candle and then see what happens in the bullish candle's engulfing and its low, and what its low is, and it closes above it, then this is a bullish setup for us. And if you look at the bearish candle, similarly there is a bullish candle and the next candle, meaning this one, is bearish. Let's change the color so you can see how it engulfs. If it's below this low, then this is our bearish setup. This is the bullish setup. How do we enter? We enter when the market comes into this zone. This is bullish. When the market is coming down like this in a bearish manner on H1 and it takes out the sell side liquidity and the buy side liquidity, then we have a return to the range liquidity here. We'll pick it from this low, place a sell here and plan the trade from here. Now, I'll also explain how to refine liquidity for those who don't understand what liquidity is and where it is. I'll explain it to you. If the market shifts its structure like this, the simple structure of the market shifts like this. When the market comes back like this, see what it does to the sell side and buy side. Here you can see the buy side and sell side. Here is the first liquidity, second and third, which is our entire liquidity. So where will we buy the market from? We'll buy from below this low and take it up. This is our pattern, and this pattern will work in both bullish and bearish. It's a simple concept. If you understand it, you can trade easily. Now let's start the next class. This was the previous class which you can also watch, so you won't have any issues. Now let's start this daily. We'll have to shift to daily. If we put it on daily, the market becomes bullish. Our target is done. So now let's see the next. The market starts retracing here and it has to do accumulation here. See, accumulation has started here. Now let's start the next. See, this candle has taken the low of this candle. If we look at H1, the story of our structure is also explained here. The buy side is done and here the sell side is done. And see where the liquidity is lying. All its liquidity is lying here. If we go to the candles, if the market comes into this zone, we'll sell it. All its liquidity is lying here. If the market stops it, we'll sell it from here. Let's see on H1, what did the market stop? Our base is this engulfing pattern, which we are trying to sell from here to below. Now it's bullish. Our storyline is going bullish from below, so we'll refine it. Where will the market come? Let's clear it once because the market has taken its view from here. If you see, its first liquidity is lying here with daily. So this is its first liquidity point. If you see, this engulfing, which we had in the previous, worked for us today. Like this engulfing worked for us in the previous for the buy side. Okay, what we call it is flip. It's simple, support by resistance, resistance by support. Similarly, we use engulfing as a clip. This is a zone for buying and this is a zone for selling. If we sell, there is H1 liquidity lying here. So after picking H1 liquidity, we can sell it. Let's see, the market hasn't gone yet. See, the market has gone down. You can get a trade here based on 15 minutes, but based on H1, there is no trade yet. Even if you look at 15 minutes, the market hasn't gone bearish to its zone. Now, if the market has to go bullish, it will have to pick liquidity from this zone and then go bullish. See, it picked this zone. Now the market can pick it or tap this zone and then we'll buy. If it taps this zone, we'll buy it here. After picking this low, the market can go up to here. If the structure shifts, we can take a risk based on 15 minutes. If we put it on a line chart and if you see just the sell side has happened, see the market has done its sell side liquidity again. The buy side is still pending. See, the buy side isn't there yet. Here both are cleared, buy side and sell side. So its real liquidity will be lying here. We can call it bullish from below this low, or otherwise our SL will be small here. So we'll buy it targeting this zone. We've done the selling from here. All the liquidity is lying here. So we've done the selling here. If you see the base, our base is lying below for buying. This is a risky setup based on our buy side liquidity. If the market comes down, it can still be bullish after picking this low. It can also tap this zone. So we'll run it. There is no issue here. The next candle has opened. Let's see which side the market picks liquidity from first. See, it picked liquidity from this side. It tapped our zone. After tapping the zone, if the market shifts structure, it will be a win for us. Why did our SL happen here? Because our base was just structure, not engulfing. If we take engulfing along, our probability of profit increases. Just structure won't help us. If you see here, wait for 15 minutes. If you see on high minutes, its sell side is done and its buy side is done. Let's give the market time to retrace here to make liquidity. It has made liquidity here. Okay, let's move to the next. Bullish. The market has become bullish in 15 minutes. Let's see on H1, the market has become bullish from below. If it dips in this zone, let's wait for it. After waiting, see the market is still going bullish strongly because this is its structure. Let's wait for it. After waiting, see the market is still going bullish strongly because this is its structure. Let's wait for it. After waiting, see the market is still going bullish strongly because this is its structure. Let's wait for it. After waiting, see the market is still going bullish strongly because this is its. This could be news in this session, and this is a news session, not an action. We are waiting for the market to retrace. If we look here, the 15-minute market structure is still bullish. According to the 5-minute, its structure is good. If we look at the 1-minute shadows, we see that its structure here, if we look, it has ramped up and added buys. If you look here, it has added sales, and if you look here, it has added buys. So here we can take a risk with it, which will be a small risk, and we are targeting it in this leap video. So according to H1, if we see if the market retraces, we will polish it again. So let's see the market. According to the 1-minute, it will be bullish here. See, according to the 1-minute, the market will be bullish. So there's no issue. If the market comes down to retrace, we will buy it further. See the market. Still bullish, still bullish. The market has started making a leap video here. Bullish. And here we keep it on H1 and run it. There's no issue for us. If it becomes a sell, see our trade according to the 1-minute. How we planned it here, it missed from below the 1-minute, no issue. Why did the market go in our favor from here to here? We had the daily base below, the same H1 zone was there, and if you see here, we had marked this zone beforehand that the market will tap into it. So we will sell it. We will sell based on this. We also have an engulfing pattern, and we have the structure now. So this is a high probability setup. For the sell setup, if you see here, the structure has been bought and sold here, and it is creating all this liquidity. It is creating all this liquidity, so we sell it here with the same sell. And if you see in the daily, which room remains where the market can come to tap, and we need to refine it. This pick happened in the market, this liquidity, so it got picked, so we delete it. This candle's liquidity can be picked by the market, just like the market picked this candle here, so the market became bullish. So here this candle can be picked by the market, so we set its target here because we are at the top. So if this happens, we will enter the market again, see what happened according to the 1-minute. It seemed like no issue, so we will plan its bearish trade here. See buy side, and if you go to the 1-minute, it will seem like this because the stop loss will be small. If you stay on the bigger time frame, it will seem like our risks are reduced. See the buy side has also happened, and we wait here. And if you go to the 1-minute, the entry will be made here. Then see what happened here. The buy side happened and the sell side happened. Here, see the sell side happened again. The sell side happened again. So we had its range liquidity according to the 1 minute. So if we sell it again according to the 1 minute, our sell will be the same, which will be at $20. And after that, we were targeting this zone. So it will go to 20, 21, no issue. If it happens, then we will trade it again, no issue. See, the market became bearish here. The buy side sell setup happened on the 15-minute as well. And if you see on the 15-minute what came here, if the market will support it, we will sell it again. See, the market supported the same zone and we take another sell here and we set its target. Okay, so next we move here. See, very simple. The 15-minute also went, the 1 minute also went. So if you see here, the H1 is also a buying zone, buy side and sell side. And if you see here, its liquidity is fine. Bearish, 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 simple bearish. And if you see here, the cycle liquidity according to H1 came here, cycle. Liquidity came. So see, the market started shifting the structure here, like sell side and buy side. So the market can go to pick this liquidity. See, the market started going to this side. So now see here, I will explain one thing to you, that this candle, is it engulfing or not? Is it engulfing or not? This is an engulfing candle. That's the thing. If you don't understand this engulfing candle, if we pick this candle and place it on this candle, see, it is so much bigger. See from here, if I make it smaller here, and see, we mark this whole candle here, we mark this whole candle here, and we placed it on this candle. See, it is bigger than this. So this is also an engulfing pattern, which can make it sell because we write it here, which helps in making it sell. If you see on the 5 minute, this market is going to its low. Okay, the market picked this liquidity. Now which one is left in the market? This one is left. Okay, now let's see if it sells from here. This pattern is trying to make us sell here. So now we put it on one again and validate the structure shift here. It didn't happen on the 15 minute. Now see the market simple bearish. After picking this, the market became bearish. If you see the structure here, the structure was buy side, the structure came into selling. If you see on the 5 minute, we had no entry there. On the 1 minute, we could easily get an entry on this low. If we go to the 1 minute, we easily got an entry here, this buy side, sell side and buy side. And where was the internal range liquidity? It was here. Okay, it didn't reach there. The market became stagnant. This often happens in the New York session. So it's the New York session. Okay, so now we let it run, let the market run. Now see here, the market is buy side and sell side. So here, which range liquidity was there? This was there, which could make the market bullish. Otherwise, all this liquidity is there in the market. So the market will have to pick it. Now we move candle by candle. Not that we trade here with a guess. See here, it made liquidity in the same zone, picked the same, no issue for the market. Okay, see now the market started going back. See, this was also engulfing. So the market became bearish. It tapped in this time. The market was bearish. We were trying to target it. We were targeting that the market takes its role and then the market becomes bullish. So now we started here. See, this is the management. It is in our zone. It has come into the zone. So to come into the zone, we wait here for the market to shift its structure. If you see on the 5 minute, sales have happened and we have to wait for buys to happen. On the 1 minute, the structure is coming. Its shift would have happened here. If you see on the 1 minute, the structure shift would have happened here. If you see, sales have happened and buys have happened here and here. See how many times the market has shifted the structure on the smaller time frame, but we should wait for the maximum on some bigger time frame. 5 minutes, see, the market did it again. Now see, buy side, sell side happened. On the 5 minute, buy side sell side happened. So now we plan the buy a little with the 1 minute, which will, and now the market here, all this has played out. This engulfing has also played out. This engulfing has also played out. Above it easily can go, and if we see, the market will also swipe it, so we will buy it. Okay, put it at 15 minutes because we have planned this entry with minute 1 and 5 minutes. Look here, the market is bearish, and the H1 structure, if we see alongside, it has also started going to the buy side. How did it go to the buy side here? Look, it's the sell side, okay? It's a sell side structure and a buy side, and we have to wait for it to create range liquidity because it creates above the range here. Here it might pick the major low or the range. If you see here, this can also be its range liquidity. This daily is bearish with H1. If you see, the market is becoming bearish from here, bearish. See, it has become bearish on the same pattern of H1. So here we make it more bearish with the daily, and if it picks this low with H1, then we will further call it a buy. But you see, which session is it? The London session is about to come. So here we have planned its trade. How have we done it? We have taken the daily zone. The H1 structure has shifted, and then our liquidity has been refined. So we have planned the trade. Here, see, the market is picking the H1's liquidity. If you see here, the structure was on the buy side, and look here, the market's range liquidity was lying here. If I enlarge it, the structure changed here for the first time, second time. See this self-add of the market and the buy side here. Okay, here it did the buy side. So these are its range liquidities that the market has picked up here on this candle. You go to 5 minutes or go to minute 1 so that our trade can be found from there. Here, if you see health add and buy side, okay, here we see the next bar with minute 1. Outside the next bar will be bullish, the market. So you can go directly here because it's H1. If you don't want to go directly, then it's retracement and liquidity. This liquidity, it has picked. So from here, you buy it right below this low. That will be our point. Okay, right below this low. Look here, buy side, sell side, and there is also an internal range liquidity here. But look here, the market has also broken its major low. Given it has also broken the major low, so no issue, ours is lying a little below. So after picking this candle, the market can become bullish. Here the structures have come, this was a shift, but the minute 1 structure has shifted again, and if it comes to retrace again, you can buy. It's very simple, this is bullish, and here the 15-minute structure has become bullish, and 5 minutes also has a bullish shorty. On 15 minutes, if you see, there is a sell side and a buy side here, and side is here. Okay, so the structure is going to the bullish side again, so we will give a bullish trace here. Look here, sell side, buy side, then the market came into its zone, it will become bullish. Okay, the market will keep moving like this after doing buy side, sell side. Look daily, in ours this beep, we have a counter here. You can also exit here. If the market comes to pick this low, then we will make it bullish again. Okay, look here, the market has easily started becoming bullish. If you said easily started becoming bullish here, if you, the market is still bullish. If the market has taken this low here, it has taken this low and there is a closing above it, and here all its liquidities are lying. If it picks them, the market will become bullish. This recon low was not clear. If you put it on the remaining buy side and its sell side liquidity, and in this, where is the internal range liquidity lying? All its internal range liquidities are lying. Take its entry on a smaller time. So how to take it? Do it on the previous bar, because yes, we have already taken entries. So here we put it on minute 1. It's line chart here. Wait for sell add and buy add to happen, and then we are with minute 1 here. Look, buy add, sell add has happened, and simply you can buy it from here too. This will be our target. This one is also for entry. The minute 1 we have taken, the one we picked from the bottom, that one can go into our phases. Look, the market went easily. Okay, the first target here without being scared. If you see here, this is also one. This candle has swept high. What did the market do to it? Here it swept. So our first target is this one here, sweep target. This one can be ours, which is the structure. It can bring it to the sell side. If you see here, buy side, sell side, the market is standing exactly on its range. So look here, the market is standing on the buy side's range liquidity. So here we can also take a sell entry, which the market can come down to sweep this low that I mentioned. So let's see, now we put it on 1 and run it. What did the market do? Is the market becoming bearish or bullish? Look, the market has started becoming bearish. Here the sell trade was, it started becoming bearish. Which zone was making it bearish? This was the engulfing pattern. We didn't have to do it at all. The market can also come to trade this whole zone. So the first target of the selling was here. It can also be clear. So now we move a little speed up, put it on daily. I am explaining things to you along the way. Here if you see what happened, the market did what here? It was bearish. We had done a bullish trade here. Look, we didn't close the first target. Look here, buy, 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 buy. If you tell me here was our buy order more, was it more necessary for us to come to the sell side? So what should we have done here? We should have closed our buy position 100%, but it was on its zone, though, which we were targeting. It should have come to the market. Here we also close it at 100%. We also close it at 100%. We close the hot rates of 3. We let one run because the market is ours. After tapping it, which I said, this daily low can come to take, which the market didn't take this low. Why didn't it take this low? The market had to tap the upper general. It had to take this low. Then the market had to pull. So here, which session? Will it be in the New York session? I can also find out. So here, if you see the same structure of H1, the upper one from where we sold. So that same cell is making it happen. Look, the same structure of H1. This bearish, still bearish. Our target here is done. The daily low is also taken. The volume is also high session. So from here, we can take the market to the buy side. From here, if we see, we don't see it on minute 1. We see it's a structure on 5 minutes. On 5 minutes, its structure is already told. Structure here, look, buy side and buy side here for the buy side to know. This can also be a side. And in H1 buy side, and we do an eye here, it's below this low, keep it. And now what is it now for us? It won't be. Why not? It will be because this zone of it has been played. Now the market here, so here we say it like this. So look, and in the palm, look, and the buy side is clear. So if you want to buy it here too, you can take a risk here too, because our direction is on the buy side. So let it go to the buy side. Here this will be a mid-level risk from below, which is caught. That trade goes into our favor. Here a market bullish, both trades went. That one too, which we caught according to 5 minutes, that is also still running, and the rest which we caught, that trade is also running. So let's see. You see the market goes this way. Look here, see one thing here. If you see here, I explained to you. So what does the market do? The market engulfs, it sweeps its lower and closes above it. See, it is trying to become bullish. So here we take we buy it randomly with this asset and this target, because the market tries to engulf it. So here we play this trade. If it happens, we have no issue, because our trend is giving a bullish signal from below. The market is trying to engulf it. The market will become bearish here, then bullish again. We look at the session. Yes, now it's a high session. So now we wait to buy the crossover here and give it a little push. There's no issue here. If it happens, even if we make a direct entry, say even a direct entry, if you know the candle, you can see you can make a direct entry here. A bullish engulfing pattern has appeared here. Okay, a bullish engulfing pattern has formed here, which is known. It's a simple concept. We have made 3 trades here, and by putting it on daily, we clarify it. See, on daily, the market planned from here, how we entered the market. We did its back testing so that you all get to know. So what did you learn? Let me know if there is anything you didn't understand. Comment, so that in the next class we can properly clarify it. Okay, we'll meet in the next video. So those who haven't liked and subscribed, please like and subscribe, so that you don't miss the upcoming backtesting classes on engulfing candles. See you in the next video.